What's up, guys? How's everyone doing? I'm streaming in 2K now, so you can see even better how great my pores look. Or worse, I don't know. Hello. How you doing? Hey, Jen. All right, so we do have some tickers already. I thought I'm still a little undecided how I want to handle market on close from Friday. Now remember, the Dillionaire stream is now locked to members only. Resolution upgrade and actually members only? I know. But I'm wondering if I should do this, then do market on close for Friday for everyone, and then do vol stars. I'm just trying to map out my day a little bit because it's sketchy. Hmm. Friday was nasty. Ooh, we got so many. Keep it fair for the poors. All right. I will. Just trying to get Epic Pen up and running. 1 second. Then we'll get started on shit. I don't know what display this is. It's display 4? No. Also 2, 1. There we go. I found it. Why do we have 6 displays? That's not even correct. All right. Can I get a perspective on the potential trajectory of the Iran conflict so far? Sure. If you guys have like, I guess like macro questions and stuff, I'll get to them at the end. Or well, I guess I could get to them. I'll just get to them as I go. Apple, Oracle, GMA. Walmart, MU, Intel, Disney, and Apple. Jesus fucking Christ. I already got Apple. Let's have like a respectful cap of like 3 tickers a person. Although I suppose I can always just refuse to do some of them. That leaves people with bad feels. Microsoft, Marvel, WhatsApp. I don't know what their ticker is. Fubo? Is it just Meta? Nice, Jimmy. SLS and IN. Isn't IN one of the weird tickers? I can take a look at SREF. It's more macro than it is uranium specifically, but it's I'll cover it. Yeah, I'll throw Meta on the end. And then under macro, I have uranium and Iran. I mean, we're definitely gonna cover Iran and Volstar's core. Do you need to know right now? Or you want me to double dip? No, I don't. I'm looking past 2 to 3 weeks anyway. Let's skip it. Okay. Also get first looks on Volstars anyway. Yes, you do. I'll just cover uranium. All right. Well, we got a good set of tickers here to start off with. So, World Cup predictions. Who is it? England, Argentina? It's probably like I'm sure Argentina's favored, right? Not getting any younger. Nope. Spain? Wait, who's Spain? Who? Spain versus Argentina. Oh, England's out? That seems like a tougher call. Imagine all the money people are betting. Probably a lot. I know someone who scored tickets, but they were like $15,000 each. England got demolished. I wasn't. I haven't really been paying attention. How is Messi not just too old at this point? He's got to be. He's old, right? Hmm. Vampire. He's like almost 40. He's older than me. But he's short and fast. Hmm. I'm not. I'm neither of those things. I'm. I'm. I'm a fast sprinter. I can sprint quickly. All right, let's get started. Wasting time. So Netflix dumped hard. I think a lot of this was on the announcement of investing like was it 587 million into fucking Ben Affleck's like AI startup or buying it out for 587 million. So I mean Netflix well on their way to just making a lot of either making a lot of shit AI generated content and or having just wasted $500 million. One of the two. Obviously, not great news to them. Um, I mean, given the enormity of the immediate sell off, I mean, like I wouldn't touch it at all. It recovered a bit. Obviously, I mean, I think software as a service generally is underpriced right now, but or at least relative to the kind of PEs we're seeing in AI and semis. But this is like a very dangerous situation to enter anything on, because there's a lot of uncertainty still. Um, it does look like there's some resistance at 70. A breakout above 70 could mean reversion back into like a more positive gamma environment. I think OI, if we look, yeah, quite a lot of OI, added at like 65, 70 during the sell off. Obviously some calls bought for this Friday. So some people playing the bounce on this. It does make them more of an AI name, which could be bullish, but they spent a lot of money on it, and faith in AI is definitely diminishing. With the drop in IVs both on the 10 and 30, I would say the post earnings crush, maybe those calls are sold, or at least sold out to like 75. Out above that, I'm a little less certain. IV picks up quite a bit above 75 out to 80, 90. Looks like it's near a bottom or tapped the bottom of the gamma curve Friday. So mostly gamma falling off to the upside. Obviously, the uptick being bought by MMs is probably helping the bounce. Skews Skews look like they fell off pretty hard on both the 10 and the 30, but not that hard. I mean, they're still positive. The drop in IV was significant, like IV 30, 53 to 30. Still a little overpriced on the 30-day relative to historic vol. And then also a little overpriced on the 10-day. So maybe continued call selling on the bounce, and then maybe a more gradual recovery. I'm not sure if the news of buying out Ben Affleck's AI studio is going to be bullish for them or not. I guess it's really more of a perception thing, and obviously I'm not bullish on AI as a technology in general, but that doesn't mean the market isn't. So we'll see. Gamma neutral would probably be the bull signal to the upside, with delta neutral being maybe a confirm. So that I would then target the gap fill on the technical side of things, and then if it were to continue up 78 above that, or 82 would be the next most significant levels. And then OI change looks like lots of out of the money sold calls. That's a little harder to define. Probably the in the money or bought. Maybe the 64, 63 are sold. But room to bounce. I'm just not sure if the news is bullish or bearish. So I would confirm any upside if you guys want to play the upside on it. If you just own the stock or something, then just wait it out. You got 4 legs, so not fair. I see. Does it clap when you sprint? No. Maybe it used to, but not anymore. Too skinny. I don't have as much ass padding now, and it's harder to sit for long periods of time. I didn't realize how comfy I was, or I'd gotten. That shit was nice, and now it's gone. Yeah, I'll throw EPAM on the end. Ooh, gross. That got thick. All right. Apple's up next. Pretty close to Gamma Max still. Attractive for call selling if GM wasn't consistently rising. Everyone's bailing here because they don't know what's safe to buy. And Apple just seems the most safe. There was a big drop off Friday in DEXA and Delta as well as Gamma. That looks a little bearish, and that's significantly more than you would expect to see on just middle of the quarter OPEX. So I don't think that's necessarily a good sign. Resistance to the upside 350, although a fairly clear path out to that. Support at 330 and 320 respectively. The downside of that, things get a little bit more bearish, but there's even some stability out here at 300, so it doesn't look like it would fail rapidly unless the entire market were to tank. And then this upside resistance at 350 looks pretty solid. So room for price to chop around here, kind of either way. Obviously this is a little bit of a trap locally. There would probably need to be some more momentum or increased interest at Gamma Max. I would say it most likely stays kind of pinned here, and then these get sold on the call side, but we'll double check that in a second. Let's take a look at Delta. Looks like mostly in the money bought calls. The bigger piles of these out into September, so that's not a lot of supportive charm coming from these positions. They all look further dated, August being the nearest. So not a lot of supportive charm, but calls can squeeze on the downside moves. Um, let's try to look into end of month to get a little bit of a clearer picture. End of month is fairly concentrated, like 310 to 330. So this is supportive, and the charm from this does push up. But under 320, things get more bearish, and I would say this calls start squeezing off. And that's, what, 2 weeks out? Or do we have 2 weeks until the end of the month? Yeah, next Friday. What's up, Seacraft? On the vol side, IV is very high, but calls on the 30-day are still relatively cheap. 30-day skews pushing up, but still slightly negative. So puts are getting priced up, probably due to how blown out it is. Puts on the 10-day also pricing up, so it does look like people are maybe buying puts Thursday, Friday, and 10-day options are still relatively cheap. So puts are bought puts are heavily incentivized right here. There's not a ton of like call selling opportunity. There's some that might be used to like finance, but I mean the spread between like IV30, HV30 is pretty wide. It's like -3. Like yeah, that definitely highlights why people might be buying puts here. And then out on the 60-day, there's a slight advantage to call selling. So maybe you could use the 60-day as financing for the like 30-day puts. That might be an option in order to like kind of just take advantage of the front of the surface there. There's obviously not a ton of room to the upside, like 340, 342 is kind of where gamma tops out, and the slope of gamma to the downside is actually quite steep. So this isn't a very stable structure. And gamma falls off really rapidly down to about 322. Then it kind of smooths out a bit as it goes down further. But the bottom is all the way back down at like 220. So there's a lot of room for this to slip if it starts sliding and squeezing out those bot calls. And that might be why we're seeing some put buying. Obviously, some of those put buyers getting blown out on Friday. Did look like there were puts coming in pretty much across the board all the way back to like 310. Very concentrated in this like 325 to like 315 range. And 330 to 50. So like in between there, there's a fairly high concentration of puts. Maybe those would be the ones that would be best to buy. But those are weekly. The further dated puts that we're seeing bought, the ones that are like 30 DTE plus, seem to be more concentrated like out here. And that's like 315 down to about 300. So bears do look like they're targeting both of these potential downside moves on a rejection from the peak of gamma here. But we do want to look for call selling to kind of confirm that. Maybe that's what's keeping IV low. It does look like most of the calls are out of the money, but some in. Definitely still a concentration of calls out to like 345, and price action has yet to turn around. So I'd be very cautious that it doesn't blow through gamma max. At least if I were selling calls, buying puts, I would want a lot of time right here. I'd feel much better about it on a test at like 340 than I do at current spot, 340 or 345. That would probably just be better feels mostly. But I mean, the drop off in Delta and Dexa and everything on Friday does show that a lot of those in the money calls closed out. or expired. And if they don't roll over, that could be somewhat bearish. And we could get that pullback down to the lower gap around like 315 ish, which is what people seem to be targeting with their bot puts. So people are kind of playing like this move, not playing like this move. At least that's what, the positioning on the chain looks set up for. There's a few put buyers out here, but mostly those are longer dated and there's far fewer of them. Um, so yeah, that's kind of what that setup looks like right now. I'm not seeing a lot of in the money puts, which would be more confidence inducing. Um, but it does look like there's a little bit of an opportunity to take advantage of the surface there, at least between the 60 and 30 day. All right, next up, Oracle. Ooh, yeah, Oracle's still just trending lower. Gamma neutral is starting to flatten out, which might be a positive sign for them. Gamma max turned around. Vega neutral still well above spot, so I wouldn't say that the downside here is particularly durable, but spot is well below Vega neutral, which is not great. Obviously, back above gamma neutrals, the bull signal. Delta neutrals probably bull confirm. Options are more bought, but delta's continuing to fall off, so we're seeing probably bot puts closed around here. This may be nearing a bottom, but we'll check that out. Hold on. It does look like there's room to move down to 120. I'm not sure price action on Friday hit that low. It came kind of close. Closed at like 126 after a test of 121. Um, Not a ton of calls being bought to the upside out to like 140 yet, so probably not readily going to turn around. Maybe some call selling opportunities on a retest of 120, or put selling opportunities. Sorry. And then on the Delta side of things, this also looks pretty shitty. I mean, just tons of in the money puts. Out into the end of the month, it still looks pretty bearish. Maybe sold puts at 125, 120. Let's see. Yeah, puts are priced up quite a bit. Skews at negative 0.01. So put pricing winning out on the 30 day. 10-day skew still looks kind of panicky. Options on the 30 day are very expensive, so put selling on the 30 day is slightly advantaged here. So maybe put spreads 120, 125 ish look pretty good. Options are pretty expensive on the 10-day too, but HV is climbing pretty quickly, which may mean that very, very soon put selling becomes advantageous in the shorter time frames as well. Obviously, there's going to be a big spike in implied vol going into earnings, so you'll probably want to look out there for any kind of recovery. All of the volatility is to the upside, so people are betting out there. They're just not getting any price improvement. Does look like the low in gammas around like 112. Friday saw a drop down to like negative 31 million, which bounced back to about 13.7. That's really not enough gamma to keep price suppressed. I would say, if it gets out back into positive gamma territory, that might be a decent bull confirm going into earnings, or going into the next earnings. But there's still quite a while till we get to them. They're out in September, like September 18th. So the rest of the summer. And hmm, I would say we're definitely seeing bot calls. Just not sure we're seeing enough of them to turn things around. And the puts are a little bit more confusing. Probably still bought. Like the short dated ones look bought. Everything like down to 110. These still look like they're being purchased. Um these at 120 longer dated. These might be sold puts. So these might also 125. Yes. These like these more structural ones at major strikes. Those all kind of look like sold puts. The further dated ones, though, I would say, given the 10-day skew, these are bought. But everything out past that is probably sold. So closing that gap between HV and IV as IV starts to climb, put selling opportunities will get a bit better. GME. Mm, oh, GME dumped a lot of delta on the 17th. Chain went from 979 million to 658 million. So about 30% of the delta on the chain fell off. Gamma dumped pretty hard. That looks fairly bearish. Not much more support to the downside under 22. Yeah, 21 and 20 look far less supportive than they have in the past. Not as much confidence from the put sellers there, and the cluster of like sold calls seems to be walking down with spot. I mean, just a couple months ago, people were selling calls pretty readily at like 25 to like 27.50. Even 30, and now they seem to be more like sold calls seem to be more concentrated around 22 to 23. Obviously, HV is historically very, very low. This tends to be a good like leap buying opportunity in this range for GME, especially with Ivy like priced a little lower, but I'd rather see like HV90 and see kind of where that is. Yeah, that's extremely low. I mean, these are some of the lowest levels for like HV90 since 2018, sorry. Which is significant. I mean, this is like leap options on GME are probably at some of the cheapest prices they've been in a very, very long time. And I would say that people are mostly long those options still, and skew 90 is quite high. And those options are actually a little cheap relative to their historic performance. Skew 60, the 60-day options also priced pretty fairly. The skew is pretty negative there, so those are largely sold calls, bought puts. But there's a little bit of pricing advantage there as well. The 30-day, not so much. Skew's been pretty wild lately, but looks like skew 30 is quite low. Options are priced a little expensive to HV30, so those still present some selling opportunities. And then the 10-day options are overpriced also, so also like another sold call type opportunity. Those are a little bit more call heavy. It does look like there's some bifurcation still on the upside around the major strikes at 25, 30, and 35. But the slope of gamma to the downside, gamma falls off pretty quickly until you get down to about 18, where it starts to stabilize again. So that's also a little less supportive than it had looked in the past. Looks like some closed puts at 30, maybe some sold puts closed at 20. All of these further dated, almost no near-term options interest on GME at all. And then on the call side, it does look like some short calls are closing out that were further dated. So we're losing OI on the short calls. That might also represent a signal of a turnaround here. But remember, these are quite far dated. So like October, Jan, 2026 seem to be where we're seeing the most interest move around. And then yeah, I would say it looks a little bearish, but starting to maybe turn around due to the shift in pricing. Walmart. Oh, Walmart had a fucking wild day. On Friday. Looks like it closed back near gamma neutral, which is not great, right? That means the upside got sold off. It was a sharp rejection near the gamma max level. This is as part of a recovery. So, I mean, I would look for support at gamma neutral and then see if the trend continues up from the recent bounce. Some delta fell off and options became more sold. Gamma trimmed pretty sharply. Looks like spot is not showing up. Oh, weird. Spot's at 114.24. So, spot's just even. So yeah, it's basically at like the flip point. Maybe some sold puts here, under where gamma flips negative, but room to slide down, like pretty easy for price to traverse this range back down to 110 or this range up to like 115. I would say the lower close probably indicates that the trajectory is to the downside. So about $4 more of downside room before it runs into support. If support fails, then it's got another leg down to like 105. To the upside, and 115 would be the bull signal. But then, obviously there was some sharp resistance out towards 120, which is the next level I would watch. For Delta's real thin, so it does look like that 105 test is more than possible. Big support there, though. Failing 105, room down to 90. So not Delta's real flat under that. That would be, so this would be the bear confirm. Bear confirm. With bull confirm out here at 120. The rest of that range, this is, probably why we saw such violent price action on Friday, because the delta in here is so flat. It's very easy for price to just kind of snap back and forth between those 2 points. But yeah, that's somewhat interesting. So a little bit, I think downside, but we're gonna check vol and see if that's confirmed. So skew did drop back to negative on the 30-day. Those options are a bit overpriced relative to historic vol, which may encourage more call selling here at the upper resistance. That like 115 resistance that we identified. On the 10-day, things are a little bit more bullish, and also a positive spread there on the IVHV. So also option selling encouraged here, but we don't see that that doesn't seem to be on the call side yet. I can see that flipping right back to negative. Especially if like gamma neutral is lost, but yeah, I would just watch that downside flip to confirm a move down. MU So went to retest gamma neutral on Friday. That failed. There's 85 billion in delta on the chain. That's been dropping very, very steeply over the last like 4 days. And options are becoming a little bit more sold. So these upside tests getting sold off pretty consistently. It's a little bit of a turnaround in gamma near the lows here. But probably plenty of room to continue moving down to fill the gap from May 22nd. And I would say the next level of support's around 657-ish. Does look like gamma will continue down towards like 800. Especially if open under 850. Above 850 is pretty bullish though. I guess there's two supports down here, 800 and 815. Maybe put spreads, something like that explains the gap. Delta also supports a move down to 815, under 850. So it's like $45 of range in there, or not 45, 35. $35 of range in there. Out to the upside, also not bad. Out to like 900, 910 resistance. This is a major resistance. This is a minor support. And then a failure from there, down here to this more larger delta resistance down here at like 740. Somewhat significant. Skew's turning around, but still pretty deeply negative, and options are still cheap, so there's still some incentivized put buying, which has been ongoing since about 623. And obviously those puts have priced up quite a bit on the 30-day, but calls are quite cheap, or getting even more cheap, which might explain like the test of GN Friday. Not so much here on the 10-day though. These are a bit overpriced, so maybe that's where we're seeing some put sellers step in. The curve is flattening, so it does slow the downside momentum under spot. The steeper part of the curve is already realized, so the downside's a bit more grindy now, and probably less volatility sensitive. Looks like some in the money puts closing, so some profit taking from bears. Not too much put OI added, and then tons of call OI added. So people still pretty bullish on this, but I'd want to see tomorrow's update to see if they stayed bullish after the rejection Friday. So like if call OI flipped or concentrated closer to spot on Friday or closer to the high on Friday, which is, what was that around? That was like 903. Actually, this kind of already does look like people sold some calls up there. So yeah, this might be a little bit more shitty, actually. Yeah, I could try to do bull at the end. Yeah, I would say they're probably selling those calls and maybe buying some out of the money puts. But those are pretty overpriced now too. So it might be like a little bit of stabilization here around these prices. We'll see. Yeah, Gamma's pretty negative, so down, down, spot down, fall up. I feel like that opens a ton of downside room. But maybe just don't be bearish unless you can confirm the loss of 815, or just play the 815 test. I would just be worried about support rebuilding down here and then, shooting back up the ramp, like, or well, the flat plane and delta out towards like 900 again. I can check Campbell's. That's not an actual ticker. I'll just do Campbell's right now, because this is not going to be very interesting. Looks like people are selling the 20 and 21 and 22 puts still, probably selling the 25 calls. Delta looks about as boring. 22 is pretty supportive on both. There's a bit of a pricing advantage on the 30-day options. 60-day options are great to sell. Those have a nice little spread, especially for a dividend stock. 10-day not so much. Those are a little more buy favored also, and HV is falling, so maybe some call buyers step in the shorter term. Gamma falls off pretty quickly, but only down to about 20, so there's like not a ton of range on this. GN dropped pretty sharply, which is somewhat bullish. Obviously the move out to 2025 got rejected, but this might find support. Close was 2208, delta neutral is 2209, so it closed like 1 basis point under DN, which I don't love, because that definitely reopens like a 2150 test. But that could be a good put selling opportunity. And it looks like VN and GN are diving, which is fairly bullish. So that positioning down at 20, definitely betting on the upside. A little bit of delta off and a little bit of gamma, but that's not a big deal. This options chain's not very active. So there's some opportunities to sell options further out. That's all I'd probably be interested in. I don't think I'd want to play it directionally. I don't think it's worth it. Intel got a little bit of support, closed back above. Yeah, it looks like it closed back above GN. No, just slightly below GN, actually. Ooh, yeah, I don't love that. That looks kind of bearish, but semis have some support at 90. It's at 95 right now. Resistance at 97.50. So definitely more room to the downside than the upside. Looks like people are fairly bearish on it. IV's rising on the drop alongside HV. Options are overpriced, but puts are still pricing up, so there is downside demand. 10-day options are extremely expensive relative to their historic vol. That's fucking nuts. And skews flattened out over the last 2 sessions, but hasn't really turned around much. They do have earnings coming up fairly soon, I believe this week. So, I mean, there's not a whole ton of analysis I can do besides telling you that the 10-day options are drastically overpriced. That might encourage put selling, but it doesn't seem like it's doing that just yet. Maybe down here at 80. On the call side, those also look sold. So looks like everybody just selling the vol into the 10-day window. And then we'll probably pull it back after earnings for the vol crush. or just leave it. Like everyone's just kind of short strangling it. It looks like, but maybe with like a slightly bearish bias. Don't ask me about companies that have earnings. It's usually a waste of time. The setup's almost always identical. It's just everybody sells the vol if it's anticipated earnings. Everyone buys the vol if it's under anticipated. It's about the most boring positioning you can find in the market. Um, Ooh, I actually like Disney. Was that an inside day or did it get a new low? 97.28, 97.05. That kind of sucks. What was the close? 99.71, 97.67. Fairly flat close over close. Down, but not that much. Somewhat recovering a bit. I don't like the drop off in Delta with the OPEX expiry. That's quite a lot of Delta and Gamma falling off, and it doesn't look like it's rolled over yet. But still positive Delta and Gamma supporting spot. These puts are probably sold broadly. There's room out to like 110 or room down to 90. But I feel like if we narrow that, that's going to get closer to where spot is. So let's look end of month. Yeah, it's just tighter. Same thing though, like 93 to 100. So getting a little bit compressed into the end of the month in this price range. IV is rising. Obviously, earnings are coming up start of August. IV 30 has been picking up since about the 3rd. That's been fairly consistent. Options are overpriced massively. Big fucking spread. It's like positive 13 points. And skew up, so call's getting a little bit more bought. The IV10 is cheap, but that's because earnings is out past the 10-day window. Skews flattened there. Yeah, a little negative, but barely. So not a huge pricing advantage on the short term options either. Bigger support down by like 90, 92. Spot can kind of go either way. Then the OI, yeah, still looks like people are buying the downside puts and maybe still selling the shorter dated calls. That might be why vol hasn't picked up in the shorter dated calls as much. But these longer dated options might be bullish, like 110 or like November, December. I need to go. Hey, since all of that seems to be way the fuck out there. Yeah, these are IV60s overpriced too. Hmm. I would say it's pinned between like 90 and 100 or 90 and 110. Locally, though, 95 and 100, so tightly pinned. Might have a hard time moving out of this range for a little while. Maybe look for a break of 100 to the upside to confirm a move up, or a loss of like 90, 93, 94. 94.75 to the downside opens up a new low test, but I don't think that goes much lower than 90. So I guess the bear signal would be under DNGN. They're pretty close to each other. Is your straddle on what gonna get killed? Celsius kind of falling back to delta neutral, gamma neutral, but it does look like there's some buying at those levels. Not maybe not short dated. This is coming on the back of a test near gamma max, like like a week ago. Still looks like accumulation, but just not like an upside move in that accumulation yet. Obviously, DN falling is, and DN and GN falling is showing us that there's some slightly bullish positioning coming in under under 30. Maybe more sold puts again. That looks like there's some support at 29. A loss of 29 though really does open up the downside out to like 25. This would probably be a large buying opportunity, as I do think these puts have been sold for quite some time. These may be sold as well. So those could be supportive, which would give us like a low at like 28.50. And then like if 27 were lost, that would be bearish locally. But then, support here. Major support down at 25. Out to the upside, there's actually not a lot of resistance, which is probably why it went up so quickly. And this is most likely like the bearish positioning after the high test pulling back. That does open up the upside range back out to like 35. But support needs to be established inside here first before I'd be wanting to bet on that. We'll see how that positioning looks over the 30-day. I mean, skew down a little, but still calls priced up. There's some advantage to selling options, but not quite the puts yet. So, like I said, there may be a little bit more room for downside. And that's over 30 days. Over the 10-day, also, IV pretty high relative to HV, so some options there, but puts priced up a little bit more than on the 30-day. So this may also be a put selling opportunity. So both of the front tenors kind of showing the same thing, that there's some put selling opportunity locally. That may be why the gamma curve is flattening out a little bit. Under 25.50, it flattens out a lot. Very hard to move down into this range, but the local range, I mean, still has some room to go before it really falls off or under like 27.50. So I would say it probably falls into here, trades sideways a little bit, and then finds support from sold puts in this range. Sold puts, then move up, then back up. But that could take like a little while to play out. I wouldn't want anything too short dated on that. We'll see if people are selling those puts. Yeah, I mean, it looks like there's a big concentration of puts here. And since we're not seeing puts price up, I would imagine that they're being sold. Possibly even selling the in the money puts. Given that skew's really not super bearish, it's definitely not panicky in any way. So I would still contend that this supports what we were saying before. So still the idea of we pull back a little and then find support as those put premiums rise and more people are even more incentivized to sell them. And I guess out on the chart that might look something like like a pullback to DN. Which is right around that level, and then support for a move up, but now with a higher gamma max, GM moved up because this is like these shifting down is bullish. This flattening is bullish. This being more bought is bullish. And the delta lost looks like it was in the money puts closed. Not like more puts bought. Same for the dropping gamma. So I would say starting to turn around, but don't expect it to be a quick, like, it's not necessarily going to snap back unless it gets back out over 30 something, like back out over like probably like 31 3130 would be a better, like, confirm that the upside is starting. I already did Intel. Oh, you're straddle on Intel? Yeah, maybe. I don't know. It's got range. It's just not great. This also looks like shit. I mean, there's dip buying here. I don't know how much. You got a new low. That's usually already a, like, continuation signal. Prior low was back at 419. We closed above that and we managed to hold delta neutral. Options got more bought, so someone's trying real hard to turn this back around, around this 400 mark. So let's see what the positioning looks like. Obviously, these are probably sold puts. There is just a straight shot to the downside and very, very little supported spot. So 400 test is pretty likely. Back out above 430. Full signal. And then, a pretty straight shot out to like 450 from there. So there's like a $20 potential upside move, and then like what is that? $26 downside move. So downside's a little bit more advantaged, at least in the overall positioning. Let's take a look at delta. Let's look a little closer. Yeah, still real bearish and plenty of room to move down to 400. There's not any, like, supportive delta in the way of spot continuing to drop. Skew 30s, like, trying to recover a bit, but that's on the back of put selling, which definitely needs to accumulate a lot more. IV30 is still very high relative to HV30. And people probably want to sell the 400 put more than they want to sell the puts at spot. Also, IV10 a little overpriced relative to the historic. So again, more option selling opportunity, which is why we're seeing the curve so flat. This really doesn't give us a lot of directional bias. Slow grind down if we were to go down towards 400, but consistent. 1 second. All right, I'm back. Sorry about that. These puts closed, so some of the near term, like, put sellers not feeling all that confident. I would say these are all sold calls, especially given how far away from spot they are. So yeah, it looks like people just taking advantage of the really high IV and selling options, but not a lot of bias in either direction. So just, I don't know, short dated, short strangles. I wouldn't touch it because it's probably too, like, the HV is probably too high for that. I don't know. I don't love it. All right, fucking Rocket Lab. Another one that bulls are trying to save. Slow turnaround in skew adjusted decks, but decks falling very consistently in a very consistently bearish way. This has been ongoing since you guys asked me. I started checking this months ago. Looks like shit. Looks like people don't want to fucking own it at all. Maybe because they're a fucking broke company that makes rockets. But yeah, there's some major support at 65.60 to the downside, but a smooth path down to those levels. Delta's a little narrower, but same thing. Support at 65.60. No resistance out to 75 to the upside. If I were gonna trade this, I'd probably want to see skew turn around a bit more. It doesn't look. It looks like all the bullishness on the 30-day fucking bled out over the last week. Options aren't very, like, the pricing isn't very elevated relative to the historic vol. There's only like a positive 3-point spread there. Buying them was far better back here on the 26th than it is now. So there's a slight advantage to sellers, but very thin, especially for a stock this volatile. Probably not worth the risk. So probably not a lot of option sellers come in, which means more realized volatility. And then as realized volatility picks up, there'll probably be a better advantage to options buyers. Same thing here. Options overpriced relative to historic, but historic turning around. Does look like there was a snapback in skew on Friday, so some of the delta coming off of the chain a little bit more bearish. Again, bulls are trying to grab this, and this isn't a bad place to do it. Gamma doesn't fall off much to the downside, and we do see the curve to the downside flattening out, so people are selling puts in here. Maybe just not enough of them yet. Looks like the short dated, yeah, like 68 all the way down, down to like 50. So probably these all put sellers and this more structural put selling, like longer term positioning. So people betting that it holds like 50 over the long term. But some betting a little higher out here. These like bot puts or in the money puts are closing. So again, that verifies that the delta we're seeing fall off the chain is profit taking from bears. But these sold puts that are coming in can still squeeze out at least these short dated ones here, which does give room to move down to like 58 or maybe like 65 before support's found, and then you'd maybe see more put selling as it became more advantageous to do so, because it is not yet. Don't love that one. Microsoft. That's a lot of fucking at the money calls. Out to 210, fell back to 395, and if I remember correctly, 395 was where support was. This looks like, I mean, it's a little bit of bearish consolidation and that broke, and then kind of more consolidative upside pricing, but looks overall moderately bullish. Friday wasn't great for Microsoft, obviously. It did lose a chunk of gamma and delta, and that's probably call side profit taking from the local high on Thursday. There's support at 390. But a loss of 390 is very bearish, all the way out to 350. Very consistent drop there. Some minor supports, but nothing major. And then out to the upside, resistance at 400. So these calls that we just saw might be sold. Delta pinned. I mean, yeah, we're like pinned on the delta. Bearish under 390, bullish over 400. And since spot's pinned, you probably want to make sure that you have confirmation before entering anything directional. Skews flat, like within a range over the last couple of weeks. Options are overpriced, which means call sellers are definitely piling into the upside. So those those calls that we're seeing out to the upside are probably sold, which isn't a great look. The 10-day IV's coming down here, and skews dropping. So probably also seeing call sellers on the 10-day. They still have quite a lot of spread left. Gamma falls off pretty cleanly until you get down to about like 365, and then it slows. So these puts out here are probably getting sold. But spot's pretty free to move down. It's fairly free to move up also out to like, what is that? Like 410. But out above 410 it starts to kind of like positive gains in delta fall off, or gamma. This is a little bit more bearish and kind of steep, to be honest. So I would say that these calls are all sold all the way out to like 430. We're not seeing any in the money calls, so not very bullish. And then on the put side, these are probably bought down to about 380, and then maybe less confidence below that. But I would say that the puts that we're seeing closed out here at 350, these are probably sold puts bought to close. So Microsoft actually looks pretty bearish. Not a lot of local range, but more range over time. So I don't really know where to take advantage of that on the curve. I guess like, take advantage of the higher IV put spreads or something like that. Over the 30-day, and then just hope skew drops. Doesn't look like the knife catch is too aggressive yet, but it does look like this can, pull back maybe to like delta neutral, maybe even back to GN, to be honest. Slow grind down though, not the most fun play, unless the market dumps, in which case, I mean, obviously the Iran war escalation is a big problem right now. Marvel, Jesus Christ, all of these fucking companies have the same setup. Yeah, I mean, a little bit of support at like close to DN. VN moving up though, which I don't like. Sold puts are falling off on this. Delta is falling off very consistently. It looks more like Rocket Lab over the long term. Like long term looks bearish. Yeah, there's a lot of gamma to the downside. 180 is the first support, but failing that, there's a fairly like negative gamma move down to like 160. And Delta's not really in the way of that. The local support at 190 has already been lost. There's like some support at 180, and then 175, and then more like a larger range back down to like towards 150. It does look like the in the money delta is kind of falling apart, which is not a great look. HV nosedived, but options are still cheap, so there's still put buyers out on the 30-day. They seem to keep piling in with their advantage, but as HV30 falls, the advantage will shift. So not a lot of time on that, maybe. And on the 10-day, options are overpriced, but it looks like people are staying in puts. Yeah, not a lot of gamma falling off to the downside, so very grindy downside. Not necessarily opening up, but would improve with oh shit, fuck. Looks like puts are being bought in the money, out of the money over the next couple of weeks, like 3 weeks into the end of the month. Then maybe some of these sold puts getting bought to close. And then above spot, probably sold calls. Maybe bought. No, I would say sold. Sold calls. Yeah. So people still selling the positive spread on IV there. That looks like 190, 195, 200. Very high concentrations. Big uptick in sold calls on what day did that come in? 15th. And then those further, I think they further increased on the 16th. Same here at the 200 strike. So yeah, people still somewhat bearish, or at least confident that this isn't going to go back over GN. I would say if it gets another GN test, that might be a good call selling opportunity. Then the low down here, around like 145. So yeah, it looks like it could go down into the 150s, maybe even 140s over time. Choppy at spot right now though. Not the best directional play. Fubo fell back below DN. Hasn't been staying under DN much lately. And Delta on the chain's picking up, but that Delta is getting progressively more sold. A lot of that on Thursday. So call sellers at the local high, which was what 1073. So probably a lot of like $12 call sellers. Gamma's flat. 10, yeah, 10 and 12. Probably sold calls there. 30-day skew's still up, but options are cheap relative to realized. And on the 10-day, options are expensive relative to realized, and calls are expensive. So probably 10-day call sellers piling in. There's no negative gamma on the curve, but the drop off in gamma slows substantially under 9 and then flattens out under 850. So there's not a ton of downside room. I think delta, there's a bit of support at $9, but not a ton of sold puts anywhere to speak of. Don't worry about this shit. It's old. It's all just for the leap expiration. I think these are sold puts from back before the merger. Those will fall off over time. Or the split, back before the split. Calls. Unlikely these are bought. I don't know. The 10 and 12 are probably sold. Those look like those came in for end of the year. It doesn't look particularly exciting otherwise. These might be bought, like the 5, 4, $3 calls. And then maybe some profit taking at the highs on these. These like leap expiration ones. Although they're not down a ton. This one's down a bit more. 161 contracts. They're very small changes. This was 38,000 contracts, so I would say that the sold calls for end of the year seem more significant. Or maybe someone bought them. But I kind of doubt it. I would have to look at what, like, I'm not even sure IV90 would show that much of a change. Yeah, maybe those are getting bought. Those $10 and $12 calls might be getting bought. We are seeing IV90 move up a little. So maybe more bullish out into the end of the year. Right now, boring AF. Stream once, maybe. SLS. That's actually harder to do. Oh, this looks nuts. Completely removed from its options chain. Obviously more delta on that chain, but probably bifurcated due to repricing. Looks like resistance up at 15, support back at 10. Really no delta in between, and that looks like mostly bot calls. So very easy to fail the 15 test and fall back to 10, or just fail locally and fall back. Skew's pretty fucking low, so there's put buyers, or puts are pricing up. IV expensive. Lots of call selling opportunities on the 30-day. 10 days kind of the reverse. Well, no, the 10-day call selling opportunity. So everyone's just selling all the calls, or they should be. Gamma flattens out to the upside, but doesn't fall off very quickly to the downside. Ugh, what a disgusting chain. Those are maybe bot pits. Those might be bot pits. I'd say these are probably sold too far out of the money. Maybe still local call buyers. That's like 15, 16. It does look like some of that's in the money positioning. Some of this leap shit might be profit taking from the move higher, or the bounce. Technically, this is breaking up, and Gamma Max is getting closer to spot. It's just not reflecting accurately, probably because the chain's illiquid as fuck. But Gamma Max is out at like $24, 24 and 28. There's like multiple maxes. So yeah, this could keep going up, but it looks like it'd be very hard for it to get above this bump at 1350. I think people are selling the call out there already, and if they're not, they probably should be. Some disagreement on it though. Oh, Ion's the one I have to go look at it on TradingView, right? Hmm, that's not right. What's the fucking, what is this, Jason? Is this like crypto or something? There's something weird about this one, right? You're in you're in San Diego, so it's definitely not infield, right? No. Yeah, I don't know what the fuck. Okay. Well, get back to me if you have some information on it. I can't remember what it was. I can't remember if it's like crypto or what it is. Not my request, wasn't it? Who the fuck was it? Jesus. It's annoying. I don't know who it came from. Upstart. Are we looking at Upstart again? Rates aren't getting better. Gross. Looks like shit. Someone's trying to save the dip under 30, but it doesn't look good. Delta's still falling off consistently. Maybe sold puts 2750, but the 31s are already getting squeezed. 25. Pretty easy downside move to 2750. And then under that, extremely bearish. Back over 30, a little bit bullish. Yeah, someone's trying to turn this around, but the call sellers look like they're winning. Maybe put sellers winning. That's tough. Skews down. IV is very high. Definitely short dated call sellers are winning. Yeah, grindy downside. Probably very hard to get under 2750 in any meaningful way right now. Yeah, I think those calls are sold. Yeah, these 2750 puts I think are sold over the next 2 weeks. I'm not too sure about the 30, but probably bought. Yeah, looks like bearish down to 2750 and then maybe support. Oh, no, that's rough. I need trading view. Oh, that's why. I mean, stable. Not really accumulating yet, but maybe back over 20. I don't think this is a great buy price. I mean, commodities haven't fully recovered yet, but as energy prices rise, so can uranium. Obviously, going into the start of the Iran war, it was doing a bit better than it did during the peak of it. It started to recover after that, as people promised that higher oil prices were going to lead to more clean energy. But I mean, a failure under 1812 is definitely bearish. At least in the near term. Overall, though, I mean, this is like a big old cup and handle. So you got this trend up. That kind of tested, failing. I mean, maybe pull back as low as 16 and then leg higher. If you're going to be in it for a long time, I'll go over the uranium macro here in a minute, but I tried to pull up some research reports on it from recently. I haven't looked in a while. Back to Gamma Strike for Meta. What? Fuck you. Looks like Meta got rejected off its highs, gap filled, bounced back towards the top of that. Delta falling off, so definitely some calls closing. Probably calls sold over the last couple of days. It does look like DEXA kind of flattened out. Gamma falling off over the last 3 days, so near term positioning closing. Gamma's flat as fuck. Yeah, I mean nothing for support. Nothing for support here either. Down to like 600. A little bit of resistance at 650. Not very much, but I would say an in the money call squeeze to the downside. So this is all call squeeze. Next relevant support's down at 600. And then to the upside, out above 650 would be bullish. But that falls off pretty quickly into the 700 test. So I would say the upside range is probably out to like 90, 700. See if that's actually getting more bearish. Yeah, skews dropping. Options are not too expensive on the 30-day, so probably some put buyers coming in there. Options are pretty cheap on the 10-day. We see vol dropping and skew dropping, so sold calls. So people probably selling the 10-day to buy the 30 and take a little bit advantage of the. I mean, they're not really taking advantage of the surface, I guess. They should probably be buying the 10-day put. Or maybe that's what they're doing. Maybe selling the 30-day, buying the 10. Let's take a look at OI. Plenty of gamma to fall off the chain. Puts, yeah, a lot of in the money puts. Calls seem to be mostly far out of the money. So call selling, and then most of that call selling more around the 30-day window. There's some in the 10-day, but it's pretty far out of the money. So yeah, that looks bearish. Not super bearish, but I mean there's $40 of downside range, which isn't fucking bad. EPAM. Ooh, still recovering. VN still climbing down, so we're getting more and more put sellers. This is establishing a base. It's just not quick. Gamma Max moving up alongside Delta neutral and gamma neutral. A little bit hard for spot to move higher than this, and it did get a little bit of a sell-off on Friday, but not too much. Not a big rejection. And gamma's moving more positive over time, so that's a good look. The skew adjusted gamma doesn't move positive very often. It's usually when the dip gets bought real hard. So generally speaking, when you get bumps and skew adjusted gamma on this stock, they tend to lead to pretty significant improvements in price. It came kind of close there. That was this next leg. That definitely helped push spot up quite a bit. So I would say the accumulation from the low back here is ongoing, but does show some signs of improvement. AMD and VRTX was requested from a member that couldn't make the live stream. I will do AMD, and then I also had one other request. I think it was Bull. How much time do I have? I have less than an hour. Sure. I still have to go over the macro for uranium, though. Yeah, bull rejected back under the big resistance. Quite a bit of delta and gamma falling off. Looks like sold calls at 750. No sold put accumulation yet. Yeah, a little bit of call selling. IV's moving up a tiny bit. No advantage to put sellers yet, so it could keep falling. Gamma is pretty steep both ways. Probably call sellers down to like 650, and then down to 7. So these are probably all sold. Maybe these 650 puts are sold. So someone trying to bet on a low, but some people betting down at like 5. And then looks like mostly in the money. And I would also say that these puts are sold, but maybe not yet. Was that earnings? Is that why it dropped off? How hard did vol crash? No, vol didn't really crash at earnings. That's yeah, 30-day options cheap. 10-day options overpriced. So maybe more instability short term. What's up, Taco Squire? How you doing, man? The support. Not strong support though. Minor and short dated. Yeah, plenty of room for this to continue down to 480 or maybe even further. No delta to the downside, really. Like 490, 480. A little bit of support in here, but under under 480, dump back to 450. Mostly calls, a little bit more structurally stable than some of the other ones we've looked at. AMD's balance sheet doesn't tend to be too bad. Skew slowly turning around, so some support building here. Options are a little overpriced, but HV30 rising. So not a lot of put selling advantage just yet. And it looks like people are taking advantage of some of the call selling here. Little spike in bot calls out of 520. Those might be closed. Yeah, grindy downside. Let's see what's going on with this. And the money puts closing. Mostly out of the money puts, but further away from spot. Out of the money calls out to like 530. When's their earnings? 724 expiry. You know, I would say this could bounce. Maybe back to 520 or 530. Maybe before its earnings. Well, it doesn't look too bad. I mean, under gamma neutral would invalidate, but that was a pretty good recovery from the drop below on Friday. I would want to see the OI update in the morning, but I think it could continue out to the upside, especially if it gets back above 500 and IV continues to increase. Non-energy metals affected by the supply chain? You mean non-precious? How many energy metals are there? Like one? I mean, unless you're getting into like francium and shit. Stuff that's not really, commodity traded. I assume you're just referring to uranium, but I'm very confused by the way you phrase that. It's not because I hate the phrasing. I just don't know. Remember when you guys used to chat more during these streams? Am I just too up my own ass analyzing all the stocks? Yeah, I'll try to cover semi supply chain metals if you want to know what looks good, I guess. VRTX. That was a nasty rejection on Friday. I don't like that. Lower high. That looks bearish. That doesn't look good at all. GM still rising. GM rose actually, and then GN also rose. A little drop in delta neutral, but that looks like bot calls taking profit in the money. Yeah, like choppy positioning below spot. If 485 is lost, it's a pretty straight shot down to 460, 560, and then 420 below that. God, the market loves that number. Yeah, not much delta support except at 470. Not much resistance back out to 500, so possibly bouncy, but I would say bot call squeeze mostly to the downside. Maybe these are some bot puts coming in. We'll check skew. Yeah, so there have been some bot puts. Friday was a little bit of those shaking off, but IV increased, so more options buyers The HV down. Does look like IV rises to the downside out to about 470. So that doesn't seem like a terrible target. It looks like those puts are probably being bought on the weekly. This one actually looks like more fun for a short dated move. There's a little bit of stability, but under 80, gamma falls off real fast back to like 55, even back to like 370. This is very steep, almost all the way down, like 430, and then like 395 under that. That's where it starts to maybe level off between those two. But I would say back to 430 wouldn't particularly present a big issue. Not a lot of movement in the puts. Some out of the money shit. 465, 482.50, 410. Calls around spot in the money. Those might be bought. Maybe trying to stabilize things here. But back under Friday's close, I think is at least pretty bearish back to 469, 470. And then maybe supported that. So like maybe kind of like, you know, this. And then like boop, boop. But if those calls snapshot, then this can just fail. And then fail further down to DN, which is, like 450. Actually, no, fuck that. I'd probably just fail back down to here, which is 420. So this isn't particularly bearish right now, but under 470, it does open up this move back down to like 420. Non-energy minerals. Oh, those are miners. That's just the name of the sector. I know what you're talking about now. Those are just like gold miners and shit. Fuck that. Fuck all of that noise. Rare earth minerals and gold miners and stuff that made the S&P, which isn't very many of them. Most of them are in like R2K, but if they're publicly traded, gallium has the highest direct exposure, but almost all of it comes from China, which you're gonna have a hard time getting any exposure to. But that's like that's going to be most of like the AI data center, like power conversion and like solar. The gallium based solar panels are cheaper, and then like 5G and RF equipment. EVs use a lot of gallium. So there's more there's broader demand on the market outside of just semis. Germanium is another one. And I don't know of those companies who has exposure to any of these. It's mostly like rare earth metals. Tantalum, hafnium, tungsten, cobalt, ruthenium. What about just copper? Copper is an easy one to get exposure to. The fuck ton of copper and all of that shit. It's everywhere. Heat sinks and wiring. Tin, maybe. Although I don't think copper is like anywhere near the top of the bottleneck. Tin is probably. I mean, tin and copper are going to be the highest demand, but the bottlenecks will be in like the rare earth minerals. And with China's restrictions, maybe that causes a spike. And what about maybe like, I don't think palladium's like a big one. That one's easier to trade. Maybe silver, gold. Gold might have a little bit of bump, although I feel like that's already realized in the current pricing of gold relative to the dollar, at least. Yeah, I don't know. Those are, yeah. Look for, I don't know, U.S. based rare earth miners or refiners. Hold on, I'm looking at this. Uranium looks pretty firm overall. Looks like uranium's trading around 85 to 86 a pound. The futures look like 85.25. September a little higher at 85.55. November moving up. So it does look like accumulation, and then contango forward. No backwardation in the market at least, but decent over time. We did see spot uranium move up like $100 a pound in Jan, but that seems to have cooled. But long-term prices continue to rise. I mean, there's still structural, like a structural squeeze on uranium that's continuing. So I mean, it's definitely I definitely still like buying the dips. It's just timing the dips that's difficult. Looks like 440 operable reactors. That doesn't seem too changed. 403 gigawatts. 79 reactors currently under construction, which is higher. 120 planned reactors, so about 180 in the works, representing like 195 more gigawatts. And that's 68,920 tons of annual uranium requirement, which is about like what somewhere around 80,000 of the trade like refined. Primary mine production is currently at 60,000 tons for 2025. So there's still a structural deficit of 10,000 tons on the currently operable reactors, and that deficit will increase. So yeah, the structural squeeze is still very much in place. China's driving the largest amount of that demand with 63 operable reactors and 38 under construction, with their annual uranium requirement getting right around like 14,000 tons. The United States is still the largest market at 19,000 tons a year. Kazatomprom is still the largest producer, still one quarter of the global supply. 2026 production level was reduced another 10% from 32,777 tons to 29,697, which is equivalent to about 77.2 million pounds of refined uranium. The company warned that production remains dependent on sulfuric acid availability, which is probably an issue with the Strait of Hormuz closed. And that's because like in situ, like recovery mines require huge amounts of sulfuric acid. So like a shortage doesn't just raise the costs, it like reduces the amount of total output. Um, and Kazatomprom hasn't shown any signs of like maximizing their volume. So they're still producing uranium at a strategic level. Cameco's the next one up. It looks like their outlook is at 19.5 to 21.5 million. But they also have temporary interruptions at Cigar Lake and MacArthur River Key Lake mines. But those seem to have resolved with no guidance reduction. Um, but the Western market is still highly dependent on very very small miners. I mean, they're producing drastically fewer tons of uranium than Kazatomprom. Estimates show right now that utilities have under contracted, which means that future spot price of uranium is likely to continue to rise for replacement requirements over the next decade. Sprott estimates that uncovered requirements exceeding 3 billion pounds through 2045, although that should be treated as like an industry forecast, right? That's not a guarantee of any kind of actual deficit. The deficit's already there, though. So the next big moves in uranium are probably going to be refreshing of term contracts. Conversion and enrichment are looking even tighter than the mining supply, though. So reactors can't use the tradable commodity directly, right? You have to convert it to UF6 or whatever. So that's like enrichment, and then once it's enriched, it has to be fabricated into usable rods relative to like the reactor. There's only four major global conversion suppliers, and capacity would need to triple in a scenario where nuclear capacity triples. They're also very like capital intensive and like generally state sponsored. And that the enrichment market for uranium has always been very geopolitically fragmented, and as we become a more geopolitically fragmented world, that's becomes more and more of a problem. Russia's always been the leader with like 40 something odd percent of the total enrichment capacity. United States awarded $2.7 billion in Jan to Centrus, General Matter, and Orano to develop or expand the LEU and HALEU enrichment. But commercial capacity will take years. They're targeting initial expanded HALEU capacity around 2029. So that's still, gives us like another 3 years of additional deficit on the enrichment side. So yeah, the western markets are still lacking sufficient conversion, and as things get worse with Russia, it doesn't look like it's getting any better. Sprott currently holds 81.45 million pounds of U3O8, which that's the pre-conversion product. That's what we trade. And it's trading at 10.9% discount to NAV as of last week. That's a big discount to NAV. Yeah, looks good. I mean, I would say that that's probably not defeated until we see spot and future spot prices like starting to fall materially, and then like term contracting has to remain below the necessary replacement levels, and producers raising output that is not already committed, which it doesn't look like we're going to see any of. And remember, Kazatomprom affected now both by Russia's war with Ukraine, and then also, the Iran-U.S. conflict. So getting that raw uranium out to refiners is even harder now. And then we'd probably want to see planned reactors reduce. I mean, that would be probably the most bearish signals. Otherwise, the structural deficits remain unchanged, and we're simply going to have to get more uranium out of the ground. I will say that, the Iran conflict both reduces global supply, and then like oil and LNG disruption and overvaluation on the per barrel crude price is going to likely increase, the push towards, like, obviously, like, several more reactors have been planned since the start of the conflict, and if oil prices remain high, then it continues to be, it continues to drive the push towards green energy. um and if governments start putting more emphasis, like the structural default continues, then governments will put more emphasis on like strategic uranium inventory, in order to ensure the health of their power grids. And then those will need to be resupplied, which again raises the future curvature price of uranium. And then we already have like a shitload of dependence on like Russian and Kazakh and Chinese fuel cycle services, and all of those could become more politically unstable in the future. That also raises, if there were a cutoff in that supply, actually, the Western nuclear fuel markets would need to very rapidly adapt to what would probably become unmanageable costs. Um, and while like most plants, nuclear power plants can like store several years of fuel, so they're not super exposed to like the daily disruptions. But if oil were to remain materially higher for longer, and flow to refiners were to be cut off for enough of a period of time, if there was a big enough gap, then as future bids came in for like like 10-year bids or 20-year bids for uranium were coming in, and demand were rising into like the geopolitical deficit while more planned reactors are rolling out, then yeah, you could get like a far sharper squeeze in uranium. But like the structural deficit's just kind of pushing the price up over time, and the geopolitical risk, if it drags on long enough and fuel inventories start to get exhausted, and more of the market, like more and more reactors are going to the market to renegotiate their forward contracts, then that could potentially drive like a very rapid spike in uranium prices. Um, but the potential like bearish effects are really like indirect and unlikely. Like it's more like oil, like higher oil raise inflation, and interest rates, which would have a negative effect on commodities, because they'll look less out into the future to buy their supply, but that also makes the market more volatile. um but the higher discount rates also like make it harder to capitalize mine expansion, which could be bearish for individual miners, but really really bullish for the overall price of uranium. And that's why I recommended SRAF, because it's direct exposure, not like Kameko or the other dog shit, like uranium ETFs and stuff, because the miners are problematic as far as the bullish thesis goes. And then obviously, like broad risk off can pressure, uranium equities and stuff like that. And then you could end up with like, if we get escalated war that expands beyond its regional bounds and becomes more, it starts to involve more countries outside of the Middle East, then that could be bearish. If nuclear reactors are being attacked during any type of warfare, then that can drop the overall like long-term price of oil pretty substantially. Um, but that would probably be about it. So yeah, I mean, I still have my notes. I'm just going through them, and there's a couple, like adding a few pieces from research reports here and there. But yeah, I would say structurally uranium's still very bullish. It just depends on how long you want to hold it. And then obviously, there's an incentive to like play SRAF, where you buy it heavily below NAV and sell it heavily above, as uh, demands on the uranium market ebb and flow. But I would hold on to some exposure into the future in case supply does, in fact, squeeze in a way that is non-correcting, because it could go up massively, like double, triple the price, even maybe more, depending on what drives that. The change in greener energy pays for itself over time. Nuclear reactors are quite good at providing energy, and they save as much money as they cost. Anyway, that's the end of this stream, and now I'm gonna go do market on close for the nerds, and then I have to start Vol Stars. So my day has no breaks, but I hope that was helpful for you guys. If Anonymoth or Taco want to timestamp this for you guys, that'd be fucking awesome. And I will have Pickles picks out for you guys later tonight as I move into my 14th hour of work, and hopefully I wake up tomorrow morning. Later, guys. Well, I mean later until like 5 minutes from now when I start the next stream. I'll see you there.